What do we expect this year? Same as last year, or hopefully something a little different when it comes to January? Let me bring in our floor show part two on this first trading session of the year. Great to see you. I'm with Tim Anderson here, and we've got Todd Colvin at the CME. So make your prediction. Will we see a little bit of a sell-off because we've had such an unbelievable run over the past 3 months of last year?
It's possible. Now, I think that we've certainly had a roller coaster ride so far today. And we had a lot of consolidation the last 2 weeks of the year. So I think it's important to just take a real close look at the market for the next 3 to 4 days, see where we are at the end of the week. We'll get December employment reports, and then we'll get an idea maybe of what sectors and what stocks the strongest money flows are going in and out of maybe for the rest of the month.
Oh, I'm so glad you brought up money flows. Todd, I was looking at Lipper numbers. Lipper is one of these organizations that is able to aggregate a lot of the numbers. The last 41 weeks, investors have pulled money out of stock funds overall. But in the final week of trade last week, U.S. stock funds saw inflows. And so to see everybody frighty cat and pulling their money out 41 weeks straight and then thinking, oh, now it's good, what kind of message do you get from that as we head into these first couple of weeks of January?
Well, I think that investors were fearful of missing the big move. And that's going to start with tomorrow's news from the FOMC, the minutes from December, which over the last year, we've seen these minutes come out. You know, they come out after the meeting, and you peel back the onion, you get a sense of really what the Fed is going to do. At the December meeting, we heard that they want maybe 3 to 4 rate hikes next year, but that's all a lot of hype. Let's break it down and see why they think that. And the minutes will give us the first look at why the Fed believes 3 or 4 rate hikes are necessary. Now, just to remember, we heard the same story last year and got only one. So investors need to be a little more cautious this year as we enter into 2017. Oh,
everybody told them to be cautious last year, and then they were too scared, Tim.
Well, you know, I almost think it's healthy that the January indicator has been thrown a curve the last couple of years, because I think in the past people have become a little bit too complacent. That January sets the playbook for the year and it just makes it easy. I actually think one thing people haven't talked about a lot, we might be setting up for a real stock pickers year. There'll be winners and losers, and the market all sectors of the market might not go up and down simultaneously.
And that does mean that you got to stay with Fox Business and listen, because we got the best and the brightest. And that includes you, Todd. Thank you so much, Todd Colvin and Tim Anderson.
You, Liz. Happy New
Todd,
Year.
Let me tell you, you too. Todd does what we are really hoping that all of you do. Just to add that tiny grain of caution, because you've got to be careful and you've got to protect yourself, and you're doing it at least by watching Fox Business.